What is going on, my friends and
You're
traders
watching
out there?
famous days.
There comes the intro.
On YouTube.
So I was watching a video from, of course, somewhere on StockTwits, and it was a guy who was basically just hyping AMC and just using all those buzzwords that we get from the Wall Street Bets folks, such as like, oh, AMC's about to get squeezed big time. And basically he was just preaching to the choir, telling people what they want to hear, just, just repeating all of those Wall Street Bets words, like, yes, AMC is about to have 1,000% rally, and yes, of course, it hasn't even started yet, and this is just the beginning. And this kind of stuff continues. Let's take a quick look at some of the most recent comments in StockTwits on GameStop here in AMC. As I post this, 277 new AMC posts since I pulled up the website like 3 minutes ago. And here we go with let's see. Here we go with GME to the moon. And all of this, just super excited optimism here. And you'd think when you see all this optimism, wow, the stock must really be cruising, right? I mean, everybody here seems loading, bullish. Wow, the thing must really be going up lately, right? Well, here's a chart, and if you look at the chart from this length, it kind of looks like it is going up, right? But then if you come back and say, okay, well, this is a year chart, yeah, if you're looking at stuff kind of backed out, then this kind of looks bullish. However, it's starting to look a little less bullish as this curves down here. Let's go to a more detailed, let's zoom in a little bit to a 20-day here. 20-day chart, you see just this grind lower that's been going on for, I don't know, about 20 days now, right? And will this continue? Now I'm at a crucial spot here with my own position here. If we go and look at the position, we are down to, I've got one options trade that expires in 2 days, which is just this. I'm long a put spread where if GME is below 200, then it comes to fruition. So we're going in the right direction there. And then the bulk of the position, though, expires in 23 days. Now, that's getting pretty close, right? And we're right in the middle of this put spread here. So it's showing, if we look at the deltas from our Greeks here at the bottom of the screen, and I've actually kind of organized these now. You can see just in view here showing a 57 short delta. So the question is, like, right now, as we get closer to expiration, we are in like there's a lot of risk going on here, right? We're coming down to the line, and this delta is expanding, and so if this works out, then it will be great, and the value of the account will double if we can get to 190 in the next 23 days. But if we don't get there, we have this risk on. And so the question is, when do we roll? We've got 23 days left. Do we, A, leave the position as it is, B, sell something against it? So, for example, do we sell the 50-40 spread against this long that we have? And take off some of the risk. And now, if we were to sell this 60 put and buy the 50 put, well, right now we have the spread on 6 times. Let's model. Let's sell this 6 times, and I'm going to right click and pick Analyze. That's going to bring up our Analyze tab here, and we can see if we were to sell the 50-60 spread. Okay, well, our delta here goes down from a 57 short to 21 short. So essentially we would be taking off half of our directional risk if we were to sell these spreads. And you can see all of a sudden we're collecting $50 a day in theta, right? So that might not be a bad trade, right? Take off half of our risk and turn it from being a situation where we are, well, it still shows it's collecting theta because we are closest to the strike that we're short, right? Right now, the position I am long the 200 190 put spread. So as we get closer to the 190 strike here, we start collecting money each day. But it's a little bit deceptive because if we don't get down to that 190 number, then we are not, the spread is not worth its maximum. If we were to, expire right here with stock 196, the spread would be worth, well, what would it be worth? It's the 200 190 put spread, right? So if we were to expire 196, the difference between 196 and 200 is $4. So it would be worth $4, right? So, which is less than half of its value if it were to go all the way down to 190. So, so that wouldn't be great if we were to expire right here, but we still have 23 days. So, so one option, as I said, is to sell this, sell something against the 190-200 put spread, which we are long. And I want to try to kind of move up this chart, this screen, so you can see it a little bit better here. There, that's a little better. So, so you can see the delta here, 55. This is the delta of our position right now. If we were to sell the, let me try to move this over so we can see even better. If we were to sell the these like 6 of the 160, 150 put spreads against this, our delta, if we click on here, our delta would go down to 24. Now, but remember what we're doing here. If we were to sell the spread, then all of a sudden we're not rooting for this to go way lower. We're rooting for this to go between 190 and 160 in 23 days. And if we were to go way lower than that, then we could, have losses. But either way, so what kind of losses could we have? So if I'm along the 200 190 put spread and this is below 190 at expiration, that put spread is going to be worth $10 each one. So that would be $10 times 6 would be $6,000. So below 190, this initial put spread is worth $6,000. However, we've sold, if we were to sell the 150, 160 spread, if we just sell the 160 put and buy the 150 put, and we're showing the price here of $2. Now that has gotten up as high as $2.50, but it's decaying rapidly right now. But let's say we were to sell this for $2. So 2 times 6 is 12. So we're taking in another $1,200 in that case. So if we were to sell the spread and stock were to go below 190, okay, so we've got $6,000 from the first spread plus another $1,200 to work with. So that's $7,200, right? However, if we were to go below 150, all the way down below 150, well, we'd be losing 6 times that $10 spread, the 160, 150. So that way we'd be losing $6,000. So we would be left with only $1,200 in the end if we were to like kind of gap below 150 at one point. However, we don't, it's not like we're just static and we have no recourse in between now and expiration. If we were to put the spread on, we could monitor the position, and at some point, if it starts to kind of, if we were to move way lower and all of a sudden, now we're at, we're trading 190, 180, all of a sudden we're trading 170, 160, at that time we could just take off the whole spread, right? We could take off the whole position. It's not like we would just leave it and let ourselves give up the money by just, it's not, unless we came in one morning and the stock had gapped to 100, we would have some recourse to take this position off. in the interim. All right, so yeah, I see Christina. It's funny how scammers Photoshop Robinhood number of gains. Yeah, I'm sure people make up numbers all the time, but you're only teasing, you're only fooling yourself. It's kind of like when people claim to have slept with some attractive person when they really haven't. It's like, what's the point? So, all right, so that's option one, is to sell something against us. Option two is, now, when we talk about trading, what is the number one best option of when we're long a spread? The best option is to sell out that spread for a great price, right? So that's the other option. Maybe today we're indicated about down $3 on the open here. Maybe today. Yesterday we got down to 193. Maybe today we possibly get down to 190, and maybe we just take the position off when we're down around 190 for a profit. That would be the best way to handle things, is to close the position for a profit, right? So that's an option two. Maybe we take off the position and we reevaluate. We take off the position, then we look for a pop up. Now, this thing's moving all over the place, so there'll certainly be another pop up, right? So we could take off the position for advantageous prices and then wait for a pop up to put it back on. The other thing we can do, of course, is roll this out, right? We've got 23 days left, but we could roll this out to August. Maybe instead of having the 200-190 spread on that expires in 23 days, we rolled it down to like the 190-180 spread in August, or the 180-170 spread. So let's see if we were to roll this out to August. And one way we can do this is I can go down here behind me, and I'll get out of the way once again, and I can select the options involved here. So here's the 6 spreads. Then I can right click and select create rolling order. Okay, so this is going to give the top one here is going to automatically set up a trade that rolls this out to the next available date. So from 30 July to 6 August. And you can see if we were just to roll it out a week and not change the strikes, that would cost us 80 cents a spread. So $80 a spread, right? So that's almost $500 to roll it out, right? 1 week. So that doesn't sound like the greatest thing. However, if we were to kind of fiddle with the strikes a little bit and move them down, we might have a better, a more close to neutral outcome, neutral cost to roll out. So let's say if we roll the spread down to the 190.80, then it shows negative 5 cents credit. I don't know if that means that it's a 5 cent debit or a 5 cent credit, but either way, it's going to cost a little bit of commissions to get this done. But if we were to roll it down $10 and out a week, we could roll it out a week and for pretty much zero cost to us. However, that doesn't, $10 in a week, that sounds pretty, it doesn't sound that great, because you need the stock to move down at a whole another $10, and you're only giving yourself a week to do that. So not a real super fan of that. Maybe if we were to roll this out to 20 August and then see, well, 20 August, it's still going to cost us 43 cents. So 4 times 6, it's still going to cost us $250 to roll it out, even with the strikes down a couple strikes. So we could look at moving this down even further. And if we were to do the 180, 170, it's still not ideal, but there you have it. And I don't, I'm not really into like rolling the strikes way down. Like I don't know if I want to bet that this is going to move like below 100 or something like that. So, but that's another option, is to roll out. So we've got 3 options so far: sell something against this in the same month, close the position, or roll it out. And of course, the fourth option, which is a viable option and which can be the best option in many cases when trading is to do nothing, right? Let's leave it for another day and see what happens. We do have this indicated lower right now before the open, and it's kind of strange because we haven't seen this indicated lower before the open many times. A lot of times, many times this is indicated higher before the open because you get the retail guys coming in early and trying to pump stuff. But now we've got it indicated lower. And usually what happens is a couple of days, the same scenario will play out. Like it's bid up before the open, then it sells off during the day, or it's offered before the open, then it rallies during the day. The same scenario will play out a couple times, and then it switches. But I think it's significant that we close below 200. I think people who don't follow this stuff that closely just see the closing price below 200, and people who are long might all of a sudden start to think about, well, maybe I should get out of it some now that it's below 200. So I think it is important that we were able to make a close below 200 here yesterday, and we'll see what happens from here. But for now, my decision is to just leave it. But I don't want to get like within a week or something of this expiring, because then it really you really have a lot of risk going on. So my idea is to leave it, and maybe if we do get a move, like let's say we were to go to 190 today or something, maybe sell something then, or close part of the position then, because we do have a decent amount of risk on, and I don't want to just give up the gains we've made in the last few days by taking too much risk. So we'll have to monitor that situation closely and see what happens from here. In the meantime, VIX kind of in a holding pattern. We're back around 16 with the VIX. Of course, with the VIX in a holding pattern, that doesn't mean that these products don't move lower, because, of course, we are in contango still. So EVXY and VXX still kind of moving lower. We're still 10% contango, which is great. We're about halfway through the cycle here, and so this contango is definitely real. And these VIX products continue to perform excellent to the downside. Of course, as the VIX products are performing excellent to the downside, I, of course, have my money in GME, which always is the case, right? When something really good happens, it happens to be the time that I'm not trading that thing. That's the way of the world as a trader, I suppose. So that's where we are right now, kind of. AMC indicated lower as well today. My feeling is that we are going to see all of this stuff crack and move lower as people move on to the next big thing, right? But we'll have to wait and see. There was some talk of Wall Street Bets going private, and I think they might have done that before, but I'm not 100% sure of that whole story. In the meantime, let's take a quick look at Drudge Report for daily headlines before I let you go here. Haiti president assassinated, gunman storm residence. Oh, that's too bad. Musk, SpaceX launches a rocket the size of the Statue of Liberty. Startup aims beyond Earth. And not a ton of stuff in the news right now. Let's look at GME headlines on Thinkorswim and see what we've got here. And trying to sort this right way. How many Wall Street Bets community see GameStop? A post on Reddit Wall Street Bets forum that argued that GameStop, AMC, and Clover are completely different plays found extreme popularity. So Wall Street U Short Ticker, which has 10 million members and also is known for short squeezes, noted that video game retail GameStop emerged as a favorite of retail investors in late December. Blah, 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 blah. GameStop is still the play of the day. And I think this makes a great point here, which is that you see a lot among people in the Wall Street Bets community of just taking any ticker symbol as kind of the same. Like you pick X ticker symbol and you say, oh, this one's really getting squeezed. This is going to the moon. Let's all jump on board. And it doesn't kind of really matter what the fundamentals of the company are. What does the company do? What do they make? How are they doing? Do they have a product? In a sense, that seems to go to the sidelines a lot of times, and people are just like, hodl, jump on, it's going to 1,000, let's squeeze the hedgies, tendies, all this stuff, and without actually really considering what it is they're buying or selling. There's been a lot of also crypto scams happening. I was reading a news story yesterday from this CoffeeZilla guy on YouTube talking about how some big some big influencers from the Phase Gaming Group, as well as Summer Rae, the model, were Instagram model, were promoting some sort of crypto, and then basically they were given a bunch of this crypto for free, and then as soon as they finished promoting it, they just sold their shares right away, and it's a little scandal going on. So I caution people about sending your money or putting your money in something that you don't understand, that you haven't researched well. That should be obvious to everybody here, not to do that. So that's where we are. We'll see what happens. Another exciting day as we come into the trading day, and GameStop is offered lower, which is good news if you're short and bad news if you're long, as we come into the trading today. So that's we'll see what happens here as we continue to kind of grind lower as the story for GameStop. Thanks for checking out the stream today, and I will check you out in the next one. Until then, make some money, stay safe, and use your own brain when you're doing this stuff. If it's too good to be true, it probably is. There you go. Thanks for watching. See you next time.
You're watching Famous Games.
Thanks for your comments, everybody. Gigi, Brady Robertson, Christina. I'll see y'all next time. Thank you for watching.